Ladies and gentlemen, a very, very warm welcome to every one of you. I am Devang, and this is the episode one of Sniper Trading Entries. That's right, it's a new segment that we are starting. So, let me tell you a little bit about how things are planned for the next couple of weeks. So, we at TFA have something special for you guys. So, from Mondays to Thursdays, every week going forward, we will be continuing our TFA Talk, which is the flagship podcast that we have, so in which we tell you every day at about 9 o'clock what can you expect in the markets tomorrow. We give you our detailed analysis and the stocks to trade. So if you haven't checked that out already, make sure you check that playlist out. So mark your calendars accordingly. Every Monday to Thursday Indian Standard Time, we will be coming out with TFA Talks. And on Friday, Saturday, and Sunday, we have introduced a new segment which you are watching right now. It's called the Sniper Trading Entries. This is an educational concept that we are starting. So on the weekdays, Monday to Thursday, we give you a lot of levels, we give you a lot of stocks to trade. But at the same time, I want the viewers to come, at par with me, because you might know the levels, but how to trade those levels is also very important. So these are some handcrafted strategies, some strategies that have been out there for a very, very long time, some classical setups which we will be bringing to you guys, so you can use them in your trading setups to enhance your profits, to get that bank on sniper entry into the market, and to 10 into your trading skill set and to make money in the market. So this is what the entire series of sniper trading entries is all about. We will be teaching you. So every Friday, Saturday, Sunday, Indian Standard Time, mark your calendars, because every these 3 days we are coming out with new episodes teaching you the strategies that we have been doing for a long time, which has helped us to make a lot of money in the market. So that's it for now, guys. Let's start with the strategy, because that's what you all are here for. So the first strategy for today I want to talk about is involving a 5 minute chart. So any strategy, guys, we'll be doing has a filter and has a trigger. What I mean by that is filter basically means what kind of trading setup, what kind of environment that you want. There are some basic principles, basic rules and guidelines for the strategy. And the trigger is what basically triggers you to buy or sell. So let's talk about the filters first. You can use it on any segment, whether you do options, futures, commodities, equity. That's not none of my concerns. Forex, for example, but it's an intraday setup. You can try to use it on different time frames, but I find it to be most ideal on an intraday setup. So I will be using the 5 minute time frame. You should, I think, try and backtest the strategy on the 5 minute time frame. I have a humble request, because we'll be making the videos on Fridays, Saturdays, and Sundays. I would like you all to first understand the concept, see the videos over and over again, and then backtest the strategy. It's very, very important. Do not just see the strategy, wake up on Monday and trade. That's not what I want. I want you to get comfortable with it. So backtest, find stocks on which they work very well, and then accordingly, I want you to snipe that stock, make the money, and send me that screenshot. Right. So 5 minute chart, number one. Number two, I'm using two tools. I'll be using the stochastic indicator, and I will be using the 200 period moving average on the 5 minute chart. How do I get those things? Go to the FX tab, indicators, click on stochastics. I want the normal stochastic indicator. So stochastic is basically an oscillator, very, very similar to RSI, commodity channel index, William percentage R. These are a couple of names you might have heard. I'm concerned about stochastic. I'm very comfortable with it. And once you click on that, I want the default settings. I want the percentage K line to be 14. I want the percentage D and the smoothing to be at 3. I want to go with the default settings. At the same time, also go on the FX, click on moving average. And I'm concerned about the simple moving average. I do not want the weighted or the exponential one. So I'll be clicking on the simple moving average. And how you can get this 200 line is go on the settings of the moving average, and on the length, I want you all to change the 200 period settings. That is basically how you get this value. So my lines have already been leveled up. Yellow is the 200 moving average, and stochastic is at the normal settings. So once we've got all these filters out, there are a couple of things you have to understand before you can use the strategy in the market. First, let's get a bit of an understanding what the moving average is. I'll be explaining in brief what these two concepts are. If you want a detailed discussion, you can read about them. There's a lot of videos available, a lot of library on Google available about the indicators, so you can search about them. So the 200 moving average is a very, very important level in the market. It is closely watched in the market. So if you are below the 200 period average, it means you are bearish. If you are above the 200 period average, it means you are bullish. So you can see on the ICICI Bank chart on the 5-minute time frame that I am below the 200. So it will always become a resistance. Something very important about the 200 average is that, so when I say 200 period average, it means, so I'm looking at the 5-minute chart. So the 200 period average will mean the average of last 200 5-minute candles. If I go to the daily chart, this will mean, now the line that you can see in yellow, it means the 200-day average, because I'm on the daily chart. That is the reason I call it a 200 period average. So I am concerned about the 5-minute chart, but we can look at a couple of examples what this thing is. So as you can see on the daily chart of ICICI Bank, if you are above the 200 MA, you are bullish. The stock will keep on continue to go higher. At the same time, if you are above the 200 MA, the 200 MA will become your very, very crucial support. It will be difficult to break. As you can see on the chart, this point becomes support, this point becomes support. At the same time, this was support. And when you cross and go below 200 MA, you become bearish. And this will become a resistance for you guys. Another example which I can show you is something we are witnessing right now in the American markets. If you see the American markets, we are getting a 200 moving average around these current levels, and that is why the Dow Jones index is taking a support at 200 MA. If you go below 200 MA, then you become bearish. But as long as it is not taken out, it is a very, very important support. At the same time, if you are below this number, you can see the stock is bearish, and the 200 MA, as I can mark on the screen, then will become a resistance. So I want you to understand that basic concept about the 200 period moving average. So let's go back to the 5-minute chart, because in my strategy, I am more concerned about the 5-minute chart. I'll go to my example of ICICI Bank. I like to trade it a lot in the markets. So that's the example. So firstly, you have to understand, it's very easy to basically decipher the markets, decode the markets. Markets are not very difficult unless until you have a trading plan in your mind. So there's a simple rule in the market that if you don't know what to do, just follow the trend. If the market is giving you a trend, just follow the trend and you can make money rather than be a contrarian investor. So with the 200 period average plotted, I know my trend, as simple as that. So as you can see on the chart, I am below the 200 MA on the 5-minute time frame. So I know very well I'm bearish. So what do I have to do? I am not going to buy ICICI Bank no matter what. I am only going to short. I hope that point is clear. So if you are below 200 MA, you will only go with the trend which is on the downside. So I'll be only looking to short the market. At the same time, if I go back in some examples, when you are above the 200 MA, you will take it as support. So your trend is bullish. I will try to buy on dip. That's what I try to say. If you are above 200 MA, you are bullish, you will go with the trend. So what do? You try to buy on dip. If you are below the 200 MA, you are bearish. What do? Sell on rise. These are a couple of basic concepts that I want you to understand. So now, since the moving average concept is clear, let's come back to stochastic. I will not explain what the construction of stochastic is. If you are a mentorship client, you probably already know what that means. But just to give a viewers of an idea of what stochastic is, it is an indicator, it is an oscillator. It tells you about the momentum in the market. Is the momentum bullish? Is the momentum bearish? Number one. It also tells you, are you overbought or are you oversold? What does overbought and oversold means? It basically means, let's say my stock price keeps on going higher, higher, higher. From 100 rupees, the stock goes to 150 in a very small span of time. So doesn't this mean, guys, that the stock has become quite extended? So when I say the stock has moved up very quickly in a very short span of time, it means you are extended. In technical terms, it means you are overbought. So if you are overbought, what does that mean? Means some kind of correction can come into the market, then the rally can resume. So this correction is possible. So this is what I mean by overbought. So when you come into overbought territory, it means that the market can give you some kind of correction on the downside. At the same time, if the stock price is at 100 rupees right now and it starts to trade down in a very short span of time, corrects to, let's say, 80 rupees. So, and if you so you can see that on the downside now you are extended. So if in a very short span of time things go down very fast, so I can call this region a oversold region. So when you are in an oversold region or extended to the downside, this particularly means some kind of correction or a pullback on the upside is possible, then the rally can continue. But this pullback is much more likely. This is what my stochastic indicator will help you to do. Stochastic will help you to understand, are you overbought, are you oversold? And that is what I'm concerned with. So I will combine the overbought oversold concept with my 200 MA to get that bang on entry, get the profit, and don't get any kind of, in the market. So coming back, what is the overbought on stochastic? So stochastic has a reading from 0 to 100. That's the reading of stochastic. So if stochastic is above 80, so stochastic basically sees the last 14 days data. It will compare your today's closing price, and it will compare that with the last 14 days high low. What is the high of last 14 days? What is the low of last 14 days? Compare that price, and then accordingly it will tell you, are you overbought, are you oversold? So if you are above 80, it will mean you are overbought, you are quite extended. So some kind of correction can come in the market, like you can see here. When you went above 80, after that some kind of correction came because you were overbought. At the same time, when you go below 20, so the region is 80 plus is overbought on stochastic, and below 20 is a oversold on stochastic. You have to keep these points in mind. So when you go below 20 on stochastic, it means you're oversold. So some kind of a pullback on the upside can happen. So I hope these basic points are clear. So does it mean you just buy because you enter the overbought or oversold? You don't do that. Please do not make that mistake. Just because you are entering the oversold, you buy. Just because you are entering the overbought, you sell. Please do not make that mistake. What you have to do is, what is a buy signal on stochastic? The buy signal on stochastic means when both of these percentage K and red percentage D line, the blue and red line, if both of them go above from the oversold zone back into the normal zone, this is called a buy on stochastic. And when both of them from above 80 go below 80, that is called a sell on stochastic. You have to be patient and wait for that. I'm not giving you the strategy right now. I'm just telling you what is buy and what is sell. So I can't say this is buy. The reason is both the levels are below 20 right now. The buy only comes when both of the lines, please remember, not one, but both of the lines should enter back, then it is called buy. And when both of the lines, if they are higher, this will not mean a sell signal. The sell signal will come when both of the lines go below 80. That is what a buy and sell is. So now, since we've had a basic understanding of what stochastic is, since we've had a basic understanding of what the 200 moving average is, let's try to get into the strategy. The filter one is it has to be a 5-minute chart. The filter two is if you are below the 200 MA, you are only looking to short. I am not at all concerned with buy. Please remember, when I say sniper entries, I am not going to make 10 entries in a day. I'm only concerned with 1 or 2 entries. And with this strategy, you won't get 10 entries. You'll get 1 or 2 trades, and they will be bang on. They will give you on point profit. You can be about your own business after that, right? So filter number 1, 5-minute chart. Filter number 2, below 200 MA, only short. Above 200 MA, only buy. So now let's try to combine stochastic. Let's try to combine MA to give you a trade. Let's take the example of today. So I am currently below the moving average. Will I go and take a buy signal on stochastic? I will not. That's the basic filter. If I'm below, I'm not going to buy. So I will ignore any buy signals on stochastic. This is where people go wrong in the indicators. See, because they are mathematical formulas, people just take them as they are meant to be. There have to be some rules, and right now I am giving you rules that I personally follow. So I am using this strategy personally in the markets to help you. So if you are below 200 MA, I'm repeating again because it's important, because I know you will make this mistake. So if you below 200 MA, no buy signal. Right now you are below 200 MA, I can't take this buy signal. You are getting a buy on stochastic because this is saying I'm entering the zone again. And price is going higher also. But I will still not take an entry because price today might go higher, maybe not in the next coming days. I want consistency. I do not want one big time profit. So as long as you can see in the last 5-10 days on, ICICI Bank, it is below the 200 MA. So I cannot take these buy signals. Ignore all these buy signals. Is that clear? Number one. So what do? I will combine my candlesticks with the entries. So you can see right now, you got a doji candlestick. After a pullback, I get a doji candlestick, or you can say it a shooting star. It is also confirmed by a sell signal on stochastic. You are below 200 MA, so I can only sell. This is a sniper entry. You take that sell, you take a 1% target. So if you sell at 393.95, 394, take a 1% target of 3 rupees, you get 391.30. It's a bang on sniper entry, nothing to worry about. What's the stop loss? Is very easy. So if you take an entry on the doji, the high of the doji becomes the stop loss. That's a very simple rule. Let's go back and test the strategy. Can I go short here? I do not have a sell signal. I can't go short here. As simple as that. The sell signal I am getting is somewhere over here. If you can see the chart, this is a sell signal. It is confirmed by the bearish engulfing or a dark cloud cover. You can see over here. Go sell here. Why? You are below 200 MA. It's a short, number one. On the 5-minute chart, you are getting a bearish engulfing. Check number two. You are getting an overbought condition, which is going down. It's a check number three. If you sell at 400.30, you get a low of 395. It's a good 1% target. Not a problem. You can decide your targets, whichever way you like. You can use pivot points, Fibonacci's, whatever way you are comfortable with. I'm giving a simple approach, 1% target. It's good. If you make intraday 1%, that's more than good. Think about that. Your saving bank account gives you 4% in a year. If you can make 1% in a day, what's wrong in that? Don't be greedy, guys, and have patience. It's a patient process. Can I go? So basically keep on finding the overbought zones. So you can see in the so today's trade, this is the 30th. Today's trade, if you took this strategy, both of the entries were good. They gave you profits. Now let's look at 29th. So today, entire day on ICICI, I only got 2 entries, and that's good for me because they are sniper entries. Now at the same time, on the 29th of October at 10 o'clock, you can see the overbought condition going down. At this point, when you go down, you can sell. Number one, you are below 200 MA, you get a bearish engulfing, you have the permission to go short. All 3 triggers are fine. If you short at 399.95, you get 395 again. It's another perfect entry on ICICI Bank. Do I take the buy entries here? Ignore. I am below 200 moving average. Can I take this sell entry? Yes, you can, because there is a sell signal on stochastic. Number one, you are below 200 MA, you are short, and you are getting some kind of a dark cloud cover pattern. If you short at 406, you get about 396. What's the harm? So in the last 2 days, I gave you 4 entries, all profitable entries. Let's go a little bit back and try to find some more entries. If you are above, I will not take an entry. Why? It is telling me to sell, but since I'm above the MA, I am bullish. I have to go for only a buy entry. So I cannot take this entry. The same is the case here. If I'm above the 200 MA, I will only take buy entries. I cannot take short entries. Now coming back to the example, another example on 27th October. So we keep on going back, try to evaluate every entry possible. So here you can see some kind of a doji is formed. You are below 200 MA, you are short on stochastic, you get about a 1% movement on the market. Another example is this right here. You are below 200 MA, you are getting a shooting star on the candlestick, a dark cloud cover on the candlestick. You are going overbought back into that zone. You are short again. So if you short at 409, you get 406. That's a good profit. So I cannot take this entry. Why? Even though I am overbought, it is above, so I cannot take a sell. Now let's take some inverse examples of how to buy. So you can see around 19th of October, you are above the 200 moving average. So in this entire period, I am only looking to buy the market. I am not looking to short the market, no matter what the stochastic says. So immediately, any sell signal on stochastic, you have to chop it down. I will not take that sell, because if you now notice, if you take these sell signals, still the market was going up. So you would have lost money. So with this rule, I'm actually helping you to minimize risk. You have to understand, currently I am not getting any stop loss, but if tomorrow you do get a stop loss in some stock, it's fine. But with these rules I'm giving you, you are minimizing that stop loss. So that's the reason I'm telling you, if you are above 200 MA, you take that sell signal, you lose the money. Same is the example here. If you sell here, you are above MA, You are in a buy market. But if you sell here because stochastic says sell, you will lose money because market goes up because you are in a buy market. So now in this entire red region I've marked, you are above 200 MA. So I have chopped out all my signals of the sell. I only look to buy. So where can I buy? That's the next question. Number one, you can buy here when you get a signal from oversold back into the normal trading zone below 20 to above 20. You can buy here and you can see that sniper bang on entry, get that gold, huge profit. That is called consistency, that is called accuracy, and that's what I'm talking about. Give it a thumbs up, guys, if you like the strategy. It's very simple, it's effective. So you have to understand, people like to do difficult things, but understand, guys, simple things are what make money. For example, double tops, double bottoms, they've been in the market for 100 years and they have been working, and still people don't use it because they think it's too simple. Simple things make money. And always remember, money is not made by trading, it is made by waiting. Another example, you are above 200 MA, you get that sniper entry because stochastic says buy, you make the money. Another entry, you get a buy signal on stochastic, you buy here, you get that money. Very, very simple strategy. So I hope this is clear. I can look at one, two more examples, because the more examples you see, the more confident that you get. Kotak Mahindra is another bank I've been trading for quite some time now. So you can see right now I am below the 200 MA, so I cannot buy, number one, and I still haven't got a signal to short. I haven't. It might happen tomorrow, but still hasn't, because both the lines have to go down. Not only blue, also the red line has to go down. So as long as you were above, so this was the period when Kotak posted the earnings, the MSCI news happened, things became very bullish. So as long as you are above 200 MA on the 5-minute chart, I only buy. So firstly, chop out all the sell signals. I'm not concerned about sell. I am only concerned about my buying. So let's have a look how good it is. So here you can buy. You can see a buy signal is popping here. Dojis, you are getting a buy on the stochastic. You make from 1549 all the way to 1570. 20 bucks on Kotak in the matter of 20 minutes. What do you want? It's a sniping entry, guys. You take that moment, scalp it out, you make money in the market. Another buy signal is something here. You are getting this sold into the normal trading zone. You get an entry right at this point of time and the trade starts moving flat. This is very important. Now you did get an entry, you might have got a couple of points profit. So if you took an entry at this point, 1546, you did go up till 1550, not a lot of movement. So when the trade starts moving flat for an extended period of time, you have to understand, it's very, very important psychological point. If the trade doesn't go your direction, but starts to move flat for the next half an hour, 1 hour, try to exit. You know things are not, something is fishy, there is something wrong in the setup. So when things move flat, either on the sell side, buy side, it's not moving in a direction, it starts moving flat, single line, exit kar do. Don't wait, because you have 6 hours, you have a limited time, you want to make money, you don't want to wait it out. Right. Let's look at some more examples. Yeah, you can see this period over here. This is around 22nd of October. So when you are above, you are only buy. So a very good buy signal came here. You can see a very, very good buy entry. Another buy has not come. Only one entry in the last 1-2 days, because when you got this buy signal, you were below the 200 ms, so I couldn't buy. Let's look at some other chart. Natural gas. Let's try natural gas. So is it okay on commodities? Yes, it is. Let's have a look at natural gas futures, current contract. Let's see what's happening in natural gas. Right. This is the charts of natural gas. So you can see this entire period, you are above 200 MA. So I will only buy. You can see this good sniper entry. You can see this is one sniper entry. Below this oversold, you come back into the normal zone. Take the trade there, 246.7. You get a profit 248.1. You get a good 1.5 point on natural gas. No harm in that. Another trade is somewhere over here. You get that sniper entry. You take a trade somewhere here. From 245.7, you get a profit till 247. You get another 1.5 point. Nothing bad. So you are getting that sniper, and it's my job to give you those snipers. And just one last example I can show you. I won't waste a lot of your time. I hope you understood the strategy very well. If you haven't understood, make sure you give us a call at 8080343031. Schedule a meeting with us and we'll help you out. So this is one last example. You are above the 200 MA around 20th October on natural gas, just a day before yesterday. You did get this buy signal on stochastic. You bought here, markets moved, you made money. So I hope you're understanding. Above 200 MA, buy, below, sell. That's what the setup is like. So this is all I have to say for this episode 1 of Sniper Trading Entries. I hope you liked it. I'll be back tomorrow giving you the profit that you deserve and giving you those and enhancing those 10 into skills that you need to make money and hit that jackpot. Thank you guys.